Hey, what's going on, everybody? Steve here, Raiken Profit over at RaikenProfit.com. And in today's video, I want to share with you 5 financial habits, things that would have helped me in my finances. 5 habits I wish I would have started in my 20s. Knowing what I know now, I'm 34 years old. And, you know, the older you get, the more wisdom you learn. And over time, you always look back and you say, oh, I wish I started doing this. If I would have started that in my early 20s, this little tiny habit, it would have made the biggest difference. And sometimes we hear these things from our parents and we just, for some reason, we ignore it, or we read it in a book, or we hear it and we just ignore it. And these are 5 things I really wish that I would have done in my 20s. So if you are a young guy, a young girl watching this, definitely follow these tips, because I've learned a lot of these from millionaire mentors of mine and just people who are 5, 10, 15 steps ahead of me. So let's get into the first habit that I wish I would have started, and that was saving for a rental property. I wish that when I was in my early 20s, and really up until I was about, when did I buy my first property? When I was maybe 31. I wish in my early 20s that I'd be putting money aside just a little bit, even $100 a month, to save for a house, to house hack. Now, what house hacking means is, for example, you could buy a duplex, a 2-family house where maybe you live on one side and then you rent out the other side, and a lot of times that could cover your mortgage. So essentially, when you house hack, you can live rent-free. Now, I always heard when I was younger, being a landlord is hard, being a landlord is challenging, people are gonna ruin your house, they're gonna destroy it, you're gonna have to deal with all these problems, and of course these are all true, but just like selling on eBay or just like selling on Amazon, a lot of people fail because they don't really treat it like a business. You've gotta put systems and you've gotta put processes in place. And I've learned with a lot of landlords, they just do a lot of the wrong things. Nobody ever taught me was you could actually hire a management company. And that's what I have right now in my real estate business. I have a management company. I pay 10%, and they essentially, do everything from finding the tenants, managing the tenants, and just a lot of stuff. So I really wish I would have started doing this. And the number one reason why this is so crucial, when you own real estate, you're able to win 3 different ways over the long haul. Number 1, when you rent out your property, and eventually you want to move out and rent it all out, but you have tenants paying down your mortgage. So every month you're going to have your mortgage, taxes, and insurance. I'll give you an example. With one of my properties now, my mortgage, taxes, and insurance is $1,350, and the rent on both of those comes to $3,000. So that's almost $1,600 in cash flow. Now, of course, I've got to pay 10% of that $3,000 to my management company. There's repairs like cosmetic stuff, turnover, there's vacancy, there's saving up for a new water heater, a roof, siding, landscaping, there's different things. But that one property is cash flowing $1,000 a month. The tenants are paying down the mortgage every single month. I'm building equity, I'm getting tax benefits, I'm also earning cash flow, and long-term, real estate has been known to appreciate. Over the short term, you never know what can happen, but over 5, 10, 15, 20 years, it's one of the best investments. So I really wish I would have started sooner. And right now I have 2 properties, but it's one of my regrets, especially with the market so high right now. I know it's a bit long-winded, but start saving for your first property when you're early. And you can use an FHA loan for only 3.5%. So that means you can get into a $300,000 house for probably less than $15,000 or $20,000. You can control an asset that great for that little amount of money. So definitely look into it, do your research, read some books, but that's number 1. Number 2, tracking my net worth. One of the number 1 habits that you want to get in the routine of doing at least once a month is tracking all of your assets. So an asset could be maybe a car minus whatever you owe on it, a house, whatever you owe on it. It could be silver, it could be gold, it could be anything that's of value really, minus your debts. So those are all your assets. Do some research. And then liabilities are going to be all your bills, any of your debt, what you owe on a mortgage, so on and so forth. But you want to subtract that and you want to figure out what's your net worth every single month. Now, I'll put a free resource down below. It's a complete spreadsheet that'll break down how I track my net worth every single month. But literally, my net worth went from a little over $400,000 to just last month, it was $715,000. In almost a year and a half, obviously there was other factors that helped it grow, but when I started focusing on how much am I actually worth, because who cares how much money you make, really at the end of the day, if you're not saving, if you're not investing, if you're not growing it, that's what matters most. What's your net worth? What are you worth? Assets minus liability. So get into that habit, do some research. You can get the free spreadsheet that I use every single month to use it. and apply it. And I'm telling you, if you start that in your early 20s, by the time you're in your 30s, 40s, you're gonna be literally crushing the competition. Anyone in your age group, I promise you, you'll be ahead of them. Let's get into number 3. The third habit that I wish that I focused on when I was younger was building my credit. Again, I got a lot of poor advice. I hate to throw my parents under the bus, but I got a lot of poor advice from my parents. I got a lot of poor advice from teachers and just the media and people that I would listen to. They always said, don't go into debt, don't get a credit card. And I agree. I'm actually a big fan of Dave Ramsey, but I also can't stand him as well because he gives good advice for the average person. So the average person, they can't manage their finances. They don't budget. If they get a credit card, they spend it all. So maybe it was good advice because, let's just be honest, I was kind of a complete idiot when I was younger. So let's not throw my parents all the way under the bus. But one thing that you want to realize is having a really good credit score can help you to grow your business, and it can save you a lot of money over the long haul, especially when you're going to get, a loan. If you have really good credit, you'll get a lower interest rate. And the difference between a 5% loan and a 3% loan can literally be tens of thousands of dollars over a 30-year period. So do your research. A lot of people who are getting into online arbitrage now, they need a lot of capital to be able to grow their business. They're investing in products. So the better credit you have, the more access you can get to capital. Of course, you could get into trouble. Do your research. Again, it's like a love and hate relationship with Dave Ramsey. But just know that building credit is very, very important for your financial future. And I wish I would have started doing this at an earlier age. Let's get into habit number 4, and that's investing in index funds. Okay, an example of that is the S&P 500. Now, Tony Robbins came out with a book called Money Master the Game, and he essentially revealed that most money managers, financial planners, and just funds managers in general were pretty much scamming you, because a lot of times they would have you invest in all these different funds with high fees, and they would rarely ever beat the market. So what an index fund is, it's a basket of essentially companies. So the S&P 500 is some of the top 500 companies, and instead of having to pick and guess what stocks do best or getting a mutual fund that has high fees, you can literally just invest in what are known as index funds, which are super low fees. I'd recommend looking into Vanguard. And over time, it's very, very, very hard to beat the market picking stocks and investing in mutual funds. Literally just get into index funds. Read the book, Money Master the Game. But if you just start in your early 20s, even investing $50 to $100 a month into index funds, you could almost guarantee that you're gonna be a millionaire by the time you're 60, 65 years old. It's called compound interest. So do your research, check out Tony Robbins' Money Master the Game, but I wish I would have started doing that. Again, everyone always told me, don't invest in the stock market. The stock market's too risky. The stock market, it's hard to pick stocks. Of course it's hard to pick stocks. Invest in index funds. You own a diversification, a basket of stocks. And overall, especially in the United States, the market's always growing, it's always innovating. And again, on the short term, you can get crushed. Over 10, 15, 20 years, you're going to do just fine. So do your research into that. And last but not least, the 5th one, this is a very simple habit, and that's just reading 10 pages a day. The more you know, the more you grow. And I'm telling you right now, with education, you're gonna be able to improve your situation every single day. First thing when you wake up in the morning, this is what I do, just read 10 pages. How you start your day is how you end your day. And you wouldn't believe if you just read 10 pages a day of just some real estate content, that's 1 book a month. How would your life change if you read 12 books a year? That's 10 pages, maybe that's 5-10 minutes for you every single morning. Over 5-10 years, if you extrapolate that out, that's a freaking, literally, that's like 3 or 4 freaking university degrees it equates to. Read for 10 minutes every single day. It's a simple habit, but we live in a world where you've got to first have the knowledge and the education of what to do, and then you got to be able to take action on it. So again, these are some of the things that I kind of regret looking back on and saying, I wish I would have just done these small little habits. And I'm actually in Hollywood, Florida right now, and we just got done with the Miami 2022 event, and I had the opportunity to meet a bunch of young entrepreneurs. Some of them were 19, 20, 21, and I was sharing a lot of this with them because these are things that I wish I would have done. I'm in my mid-30s now, and I know my life would have been different. Don't just hustle and focus on making money. Focus on growing your net worth. Focus on your education. Focus on saving money and investing your money, and learn about real estate, learn about index funds, learn about building your credit, learn about just everything in general by reading. And I'm telling you right now, this will definitely change your life. So with that being said, I appreciate you. Much love, and see you soon.